You make good money, but after the mortgage or rent, car payment, insurance, debt, utilities, and everything else you have to pay, there's barely anything left. You're not wasting your money, but you still don't have enough room to get ahead. I'll show you why this happens and which of those big expenses you may be able to change. This is why income by itself doesn't tell you how much financial freedom you actually have. Two people can earn the same amount of money and be in completely different situations. One might have a $1,500 mortgage and no car payment. The other might have $2,500 in rent, a $700 car payment, student loans, and higher insurance. Same income. Very different amount of money left to work with. That's the part that's easy to miss. We tend to look at income and think, I should be doing better than this. But the more important question is, how much of that income is already spoken for before you get to make a choice with it? Because that's where the real problem starts. Some expenses are easy to change. You can eat out less this month. You can skip a purchase. You can cancel something you don't use. But your biggest expenses usually don't work that way. You can't decide on Tuesday that your mortgage will be $400 less next month. Your car payment doesn't disappear because you want more room in the budget. Neither does your insurance, debt payment, or other major obligations. Once you've committed to those expenses, a large part of every paycheck already has a destination. Suppose you bring home $5,000 a month. If $4,200 is already needed for housing, transportation, debt, insurance, utilities, and other necessary commitments, you're not really making financial decisions with $5,000. You're making them with the $800 that's left. If $4,200 is already spoken for, earning $5,000 doesn't give you $5,000 worth of choices. It gives you $800. So the next question is, can any of that $4,200 be changed? And when that happens, the real issue isn't finding another tiny expense to cut. It's creating more breathing room. Without that room, almost every change becomes harder to handle. Your electric bill goes up $75. Insurance increases. Gas gets more expensive. You need an extra trip to the doctor. None of those things has to be a financial disaster. But when almost all of your income is already committed, even a relatively small change has to come from somewhere. Maybe savings gets reduced. Maybe the credit card gets used. Maybe a goal gets postponed again. And that's how someone earning good money can feel like they're constantly trying to keep up. And month after month, that lack of breathing room keeps you from using your good income to actually get ahead. You have income. But you don't have much flexibility. And that's what we need to change. The good news is that fixed doesn't always mean permanent. Some of these expenses are difficult to change, but difficult isn't the same as impossible. Don't try to change everything. Start with the one big commitment where a realistic change could put the most money back into your month. Ask, which of my largest monthly commitments could realistically be reduced? Housing is a good example. Maybe refinancing could lower the payment if interest rates, closing costs, and the length of the new loan actually make the numbers work. Maybe taking in a roommate is realistic for your situation. For someone else, the longer-term answer might be moving to a less expensive home when the opportunity comes. Transportation is another place to look. A large car payment can consume hundreds of dollars every month for years. Depending on what you owe and what the vehicle is worth, selling it or replacing it with something less expensive could eventually create substantially more room. Then look at debt. If you're carrying several high-interest debts, consolidation or refinancing may sometimes reduce the interest rate or monthly burden. But look at the total cost, fees, repayment period, and whether you're actually reducing the debt, not simply stretching it over more years. Insurance deserves a look too. Rates change. Your circumstances change. Comparing coverage and prices periodically may uncover savings without reducing protection you actually need. Not every one of these options will work for you. And you don't need all of them to work. You're looking for one meaningful change that creates breathing room month after month. Cutting $10 once saves $10. Reducing a recurring commitment by $200 gives you $200 of additional room next month and potentially the month after that. That's why the big numbers deserve your attention first. Here's what I would do. Write down your take-home income for the month. Then list the major expenses that are difficult to change quickly. Housing, transportation, debt payments, insurance, utilities, and any other large commitment that shows up month after month. Add them together. Then subtract that number from your take-home income. The number that's left is your room to move. Beth might bring home $5,000 a month and discover that $4,200 is already committed. Now the problem becomes visible. She doesn't need to start cutting everything she enjoys. She needs to examine that $4,200 and ask, which one of these commitments gives me the best realistic opportunity to create more breathing room? Maybe her $700 car payment is the place to investigate. Maybe it's housing. Maybe high-interest debt is consuming hundreds of dollars every month. She doesn't have to change everything today. Her first job is to identify the biggest realistic opportunity. Then she can research that one expense carefully, understand the trade-offs, and decide whether changing it actually improves her financial position. That's a much more useful starting point than assuming she simply needs to try harder with money. Making good money doesn't guarantee that you'll have money left. What matters is how much of that income you still control after your major commitments are paid. If those commitments are taking too much, look for one meaningful place where you can create more breathing room. But once you've dealt with the big expenses, there's another place money can quietly disappear. A coffee here. A streaming service there. A convenience purchase that doesn't seem important at the time. Individually, they don't cost much. Until you add them up. Now you know that making good money isn't enough if too much of it is already spoken for. But even after you create more breathing room, there's something else your budget can't do by itself.